Peter McGuire is with us on the phone line. Peter, hi. The crude prices, while the month of May has been kind for the producers, we have seen prices gain up by nearly 40%, but the demand recovery is still shaky. What is your sense on crude going forward?
Well, good morning, Manisha. Maybe the crude oil market got a little bit ahead of itself, and probably that was pushed down because we saw such big volatility swings. Everyone piled into it. We thought that there was going to be a push down as far as that end of the expiry date, and everything seemed to gather momentum to the upside for crude, put on, as you said, 45%, and in a lot of ways it was overbought. So there's probably a fair bit of profit-taking, a little bit of steam coming out of that market and consolidation, and add on to that President Trump and what's happening with China and Hong Kong, and then a swathe of other geopolitical concerns. So looks like it's having a little bit of a breather at the moment, a bit further downside pressure, I'd say, over the next matter of days, Manisha.
So what's your sense, Peter? How much of a further decline can we expect here? I mean, it's 8% down in last 24 hours. What kind of a range do you see now building up for crude prices?
Well, when you watched, I would have thought that, and there's so much, as far as governments globally, you're seeing the EU's, their recovery plan, 2.4 trillion euro. Everyone's talking it up, and the oil market's probably talking it down a little bit at the moment. So there's a wash with oil. We understand what those numbers coming out of Japan refineries, Saudis and Putin, what the story there. I think there's probably another $1 or $2 to be washed out of it, probably by tomorrow night. So I'd say, Saturday morning in Mumbai, the price will be probably another $1 to $2 lower to the downside for both Brent and WTI. I think the markets will come under a bit of pressure today in Asian trade, and that could wash over into the rest of the world and momentum to probably take a little bit of heat out of that Dow last night.
Fair point. Peter, I also want a sense on the metal prices because we've seen some recovery come in there. The stimulus measures, of course, is one part of it. But the U.S. and China trade concerns, do you see, this is election year for U.S. I mean, do you see further issues coming in, or you think it actually might get better before it gets worse?
Well, when you're looking at, let's talk about Dr. Copper first. You had 4,600 in March. It's now at 5,300 or 5,200. So that's been nothing dramatic. It's up 15%, but well off those highs that you saw in January, Manisha, of over 6,200. So it's still well down. And then if you look at iron ore, well, that's a different situation because you've got COVID and the impact to Brazil, and it's been a boon for the Australian exporters, and it's very well received here. But if there seems to be further downward pressure as far as the Brazil numbers going forward, then there's no doubt I'd go along with Credit Suisse's number of probably 110 to 115 US a tonne for iron ore in the short run. So it's all about what China can do. Let's see, if the demand picture stays, and it's very, very strong at the moment. So there's probably a little bit of upside. But any of the other metals, they're very washy and very, fairly choppy as far as trade. So I don't think they're a place to really hang your money at the moment. There are other markets that are proving better than that.